good morning. Welcome to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we'll take all your stock-specific queries with our experts. But before that, a quick look at the markets. Ankita, a very flat trend coming in for the markets, though there's a lot of stock-specific action happening.
Kanishka, as you pointed out, there is nothing much happening. In fact, we are managing to stay in the positive territory. We're struggling actually to hold on to the positive levels. But as you mentioned, we are very, very range bound. There is no direction that the market, especially the large caps, that they are picking up. Nifty is perched at 24,816 is where Nifty is at. It is at the hovering around the lowest point of the day. A very, very mild recovery coming as of now. But nonetheless, it is still trading within that very tight range. Nifty Bank also ditto, it is whipsawing, but within that very range. Nifty Bank also, it is a Nifty PSU pack that has managed to marginally tick up in the green right now. Very, very flat, but still marginally in the green. Besides Nifty Pharma, that is also doing well. And like I mentioned, within the PSU basket, it is a Bank of India that is doing very well. That is up in a way 3% in trade. PNB, IOB, all these names are doing well. Bank of India is also up 3%, PNB up 0.8%. Almost a sharp uptick coming in, in the last half an hour or so. So PSU banking names have started picking up. Nifty Pharma is also doing well. Ipca Lab is up in a way more than 3.5%. Natco Pharma, Sun Pharma, Mankind, all of these are trading upwards of 1%. Besides that, all the other counters are seeing a knock in the trade today, especially Nifty Realty that has been on the losing side for a while now. So Nifty Realty continues the downslide. That is trading with cuts of more than 0.5% right now. But as far as the broader markets are concerned, Nifty mid-cap and small-cap indices also are seeing cuts. Mid-cap is down 0.3%, small-cap trading down 0.2%. So it's really a stock-specific action on the back of earnings that is really moving the counters. And one of the, if you talk about the stock-specific action, then we do have L&T, of course, that is surging in trade. That was up 4.3% on the back of strong set of quarter one numbers coming in. We also have NTPC that is up 1.4% on the back of good set of quarter one results. We have Asian Paints that is also in focus today. Now, the numbers were, it was an overall inline set of numbers coming, but good management commentary that is really pulling the stock up. We did see mixed brokerage notes coming in. We did see, JP Morgan and Jefferies that have hiked the target price, but there are also brokerages that are not so bullish on Asian Paints. So Asian Paints in focus on the back of that. And on the losing side, on the back of earnings, we have Navin Fluorine, Indraprastha Gas and IIFL Finance that are under pressure ahead of reporting their earnings. So like you mentioned, Kanishka, it is a very stock-specific market. Stocks are moving on the back of either news flow or on the back of earnings. But besides that, the market is very, very range bound.
That's right. The market is very, very range bound. Lots of stock specific action is what we are seeing. But on that note, let's get started with all our queries. So requesting our viewers to keep sending in their queries on the number that will shortly flash on your screen. But before that, let me welcome on board Lancelot Dikuna, who's the Chief Investment Officer, ValueX Wealth Connect, and Hemant Kaparia, who's the Technical Associate at DR Chokshi FinServ. Both of them are joining us today to help us with all the stock-specific queries that our viewers have been sending us. Very good morning, gentlemen. Thank you so much for joining us today. But before we get started with all the queries, Hemant sir, coming to you, what are you making of the market? So we are absolutely range-bound. How is the earnings? How are the earnings looking to you so far? The ones that we have reported.
I think earnings have been a mixed bag, little bit of disappointing coming in somewhere. Things like VBL, Varun Beverages are exciting and a nice thing to see too. Markets, if you see, Kanishka, frankly speaking, they've gone nowhere. We spent 7 weeks between 24,500 and 25,200. We actually for 7 weeks, we actually gave a breakout, and that we give a 300-point move that fizzled out. We came back, have broken and breached 25,200, come down to 25,200, and once again cooled off. So, like you said earlier during the show, I'll just repeat that markets don't seem to be moved to go anywhere. VIX is also pretty sanguine. Okay, it's come off from 10.5 to 11.34, but even then, I mean, it's a low VIX. So, well, to compound the misery on all the confusion, we have an expiry week coming in. So, the way I see it, 24,900. 25,212 important levels. On the downside, you have 24,800 and 24,500. I have a feeling till we don't see a clear move on either side, I don't think seem to be in a mood to go anywhere. IT is oversold, so that could surprise a bit, maybe not immediately after a few days. Pharma index has posted a fresh all-time high. Simply put, we are all over the place. You said realty is bad. It has been weak. From a 1.5 year point of view, it looks very interesting. So, frankly speaking, it's too mixed to get a clear view of. I think stay away for the time being, be stock specific. But only 24,500 breaks decisively. I don't mean intraday. Is there a cause for concern? Otherwise, I believe we are in a stage of consolidation. Maybe the tariffs are putting a brake to the markets, FI selling either ways. So we are for introspection. I don't see weakness coming in yet.
Thank you, Amin, for your view on the market right now. Like you mentioned, market is all over the place. That's the key word to take away from what you just said. It is indeed all over the place right now. But let me get started with all the questions then that the viewers have been sending. It's a very stock-specific market. The stocks are moving on the back of either earnings, news flow. So let's get more stock-specific and get started. The first question that is coming in is from Venkatrao, who's writing it from Visakhapatnam. He says he's holding CDSL. He's bought it at a buying price of 1,710 rupees. He's sitting at a huge loss. He wants to know if he can average it or what should he do with CDSL right now. Lancelot, let me come to you for this. CDSL, how should one be playing the counter? Because, you know, a lot of capital market stock, the capital market theme has been in focus. CDSL, do you see, you know, some bit of a respite coming in, or do you see more cuts coming in for CDSL?
The time when with the additions to the number of demat accounts, etc., there was a lot of hope and anticipation that revenues of CDSL and SDL will grow significantly, and that has led to this kind of rise in the share price. Stock is still expensive. It trades at almost 60 times its forward earnings. And with the slowdown in terms of new demat accounts that are being opened, I think the market's seeming to price in that the future, growth is not going to be as strong as what we saw in the last couple of years. And that is now beginning to result in some kind of re-rating. So at this present price, the stock is still expensively valued. And maybe over a period of time, if it corrects further, then that would be a good opportunity to buy. But at this point, if one is holding, then it may be even wise to exit and wait for a lower price to buy into the stock.
All right, so you could consider re-entering at a lower price for CDSL. But moving on to the next query now. This query is for you, Hemant. This is Ayush writing. He wants to know which is a better option and to add currently, is it ITC Hotels or L&T Finance? Where should he look to enter at this point?
Hi, Kanishka. It's a slightly difficult call from my point of view, simply because ITC Hotels, Kanishka has what, 3 and 3, 6, 8 months of data, probably not enough to take a longer term call, frankly speaking. Whatever data we have seems to suggest we are in an intermediate uptrend, short term correction. The bigger picture seems positive. If I look at L&T Finance Holdings, I think it looks great. We are in a short, medium, and long term uptrend. You look at any time frame, Kanishka, and the stock is looking positive. Now, the hitch, if any, is simply because the stock has moved from 135 to 215. So L&T Finance has moved quite a lot, is overbought, walked into historically strong resistance levels. So I would say on declines, ITC hotels makes more sense. But if you have a slightly longer term point of view, L&T Financial Holding looks very nice on the chart. So everything is hunky-dory.
With that, it's time for a quick breather. Don't go.
Hemant sir, coming to you, we have 2 queries for you. This is Imtiaz writing from Kolkata. He has 100 shares of Syngene International at a price of 663 rupees and 50 shares of L&T bought at a price of 3,600. If you could help us with the short-term target for both, especially L&T, since, you know, we have seen a very strong quarter coming from L&T. What are your views about this one?
Okay. I know that the need for a short-term view, but I'll just take 15 seconds. 19-month consolidation in a bull market, whenever it gives a close, above 3950, it's going to go to 4800. But coming back to the main question, short term, big gap up. I'm not sure such gap ups sustain in mainline stocks like this. Having said that, like I said, 19 months has gone nowhere. Resistance comes in at 3710, above that 3860. So these are the resistance levels are two possible targets as far as L&T is concerned. Syngene has been a late bloomer, so to speak. Short-term uptrend target should be around 761, the way I see it.
Right, point taken, Himen. L&T, it is difficult for big counters like this to sustain a gap up opening. But Lancelot, let me get your view on L&T as well, because we have the numbers for L&T that came out, and of course, the stock is reacting on the back of a good set of numbers that have come out, a good positive commentary coming in from the management as well. What are you penciling in for L&T?
Quite bullish in terms of L&T, because while there may be a temporary slowdown in the short term for its for its software business and for the other businesses, very strong traction I see from the engineering and infrastructure business, and that is augurs well for the company because that's where its main core strength is. And we are seeing a strong order book as well as a strong execution capability, which is resulting in higher earnings going forward. And I think the trend is also going to continue for the next 2 to 3 years, given the kind of infrastructure spend that we are seeing both on domestic markets as well as in global markets. So I think L&T, while it may look a little expensive if people consider a slowdown maybe in the short term, but over the next 2 to 3 years, I think L&T should see good growth and should generate good profits going from here as well.
Okay. So that's the view on L&T. But moving on to our next query then. Now this query is about HAL, the defense pack. Now this viewer is writing to us from Vijayawada. He has HAL shares, 50 shares at a price of 40,500. He's saying, please advise whether to add, hold or book profit at the current levels in the medium term. He wants a medium term view. Hemant sir, would you like to take this?
Yes, but frankly speaking, looking at the quantum of the rise, it's been a humongous multi-bagger. I am not sure it justifies a medium-term view. Nevertheless, support comes in at 4,400. We are in an intermediate downtrend, so I would mean to say it's in a medium-term downtrend. If it closes below 4,400, you can expect some more downside. If you look at the bigger picture, stock is going to go to an all-time high in the next 18 to 24 months. So once again, medium-term view doesn't look very good. Extreme short-term getting oversold or bounces around the corner. I wouldn't say make or break level, but 4,400 is important. If that breaks on the weekly chart in terms of closing, expect more weakness.
All right, more weakness coming in on the charts for HAL, but there's another defense counter that this Suresh from Ludhiana wants to know about. He wants to know the rate at which he should enter BEL for long-term purpose or some other defense stock to invest 1 lakh rupees in. Firstly, Himen, let me come to you for levels, because counter like BEL that has run up 40% in the last 6 months. Firstly, do you see more upside, and what would be the entry levels?
So, okay, going back a bit in the last 5 years, it's gone from 20 to 400. So massive move. Having said that, we are safely ensconced in a longer term move, Ankita. I don't think that's a worry. Levels to buy. The closest support level is 380. Below 380, the next support comes in at 359, and the last level is 340. It's been a beautiful move. We walked into a correction of a greater degree. Looking at the way it's moved, I think it would make the stock more healthy. The bigger term picture remains positive. Keep these 3 levels to spread your purchases. Though the stock is good, technically overbought situation could mean some pain or consolidation. So levels 380, 315 and 340.
All right, so those are the levels to track for Bharat Electronics. But Lancelot, let me ask you also about BEL. Now, what do you pencil in for this one for the long term, since the viewer is looking to invest about 1 lakh rupees?
I think yes, on a long-term basis, the stock is going to grow significantly because there are a lot of orders that they have already received and which will require execution, and there are orders in the pipeline. Also, as I see it, initially the focus was on producing, defense equipment for the Indian Army. But now, given that, globally, a lot of companies are also providing arms to other countries, we will see an opportunity there in terms of their exports as well. So at this point in time, the kind of spend that is seen by defense over the next 5 to 10 years from various countries is only going to go up. And BEL is also one of the competitors who are poised to provide global companies some amount of equipment as well. So the growth in the long term looks good. The stock is a little expensive at this point in time because it has it's trading much ahead of its multiples, so almost 68, 70 times earnings. And maybe whenever there is a correction, one should look at adding on declines, because over the long term, this will be a good stock to invest in.
All right, with that, it's time for a quick breather. Don't go anywhere. She has 87 shares of Bharti Airtel that she's bought at a buying price of 2,000 rupees. What should she do? Lancelot, coming to you. Bharti Airtel. She's not given the holding period, but let's take a 1 to 2 year view coming in on Bharti Airtel. She's clearly sitting at a right now. How long should she be holding it, and what's your view?
So I think my view on Bharti Airtel is positive. While there may be we are seeing, let's say, the competitive intensity in terms of customer acquisition, easing up amongst the three players, and Bharti Airtel continues to target premium end customers, and that is adding a little bit more margins to their average revenue per user. And given that they are also now providing various other services across their customer base, that will add some amount of profitability or margin improvement in their entire. And maybe if there is further decline, then one can look at averaging this investment, because over the next 2 to 3 years, you will see significant gains as far as their profits as well as revenues are concerned.
All right, so that's the view on Bharti Airtel. You could see long-term gains in Bharti Airtel. Profits could come in over the next 2 to 3 years. But moving on, the next query we have, this is Angad writing. Hemin sir, he has a query on Hindustan Copper for the short term. What would you suggest? Should one enter at this juncture?
I don't see any compelling reasons for a short-term buy, Kanishka, frankly speaking. It's going out of the F&O segment also. Currently, lower top, lower bottom. So I don't, if you were to extend the time frame, I know he's taken as for a short-term view, then it's a buy. Short-term, no. And if he were to enter a trade, please keep a closing stop loss of 243. If that breaks in terms of closing, exit. But once again, I don't see any technical reasons for a short-term buy yet.
All right, moving on to the next question. This is Mohan, who's writing in from Odisha. He says that he's holding 7 shares of Dixon Technology at a buying price of 15,600 for the past 45 days. He wants to know if he should be holding on to it, or should he switch to some other script. He's already been holding a Dixon for the last 3 odd months. Hemin, coming to you for this, for the levels to watch out for the next 3 months. Is Dixon a good hold? He's already made his profit. So what should he be doing now?
Ankita, slightly difficult call to make, simply because this is the third time we've come to the 17,000 level in the last 4 months. We rough for 6 weeks in a row. Like I said, 17,000, third time in 4 months. So either we close above 17,000, then we give a roughly a 800 to 1,200 point move. And if we don't close above 17,000, it'll fall under its own weight and come to 16.2 and 15.8. So frankly speaking, a close watch on 17,000. If that the weekly level, we need a Friday evening closing. If that gets taken out, closes above that, hold on, good move. If not, keep a protect profit at 16,450. And if you want it even finer, keep a protect profit at 16,600. Closes below that, chances of a decline or a correction increase. So I'm saying protect profit because client is in the money.
All right, so those are the levels to track as far as Dixon Tech is concerned. But Lancelot, let me come to you and ask you about the valuation comfort as far as Dixon Tech is concerned. It's been very expensive. Do you see more upside coming for this stock?
Valuations have been expensive because the rate at which it has been growing in terms of sales was at almost 30-40%. But given the change in the whole dynamics about import of equipment from India and the possibility that we may have tariffs going, impacting the sales of manufactured goods, India good manufactured goods, I think the rate of growth is going to slow down, and that is creating a bit of uncertainty in the future growth. So valuations it trades at almost 70 times its earnings. And we could see this multiple also correct if some negative news comes up on the tariff front, which impacts the purchases from India. It could have a big impact. So the risk reward ratio at this point of time is not in favor of buying the stock. But yes, the underlying business is good for the long term. One should wait for a serious correction, and then one can look at adding it to a portfolio.
Absolutely, Lancelot. As you mentioned, Dixon Tech fundamentally is a good company, but a lot of headwinds there. In fact, just today we had the news of how India has trumped China into becoming a larger exporter of smartphones, a good 25% share that India holds. But there is a looming threat of tariffs, and that could impact perhaps companies like Dixon Tech that have a lot of export exposure as well. But let's move on then to the next question. SK Saran, who's from Bangalore, he says that he wants a combination view on Coromandel International for entry and holding for the longer term. Himain, let me come to you for the entry levels for Coromandel, and then Lancelot will come to you for what's your view on the fundamentals for the company. Over to you, Himain, first.
I think entry levels are current levels simply because it's broken out of an 8-month consolidation phase. But like I said, don't put all your eggs in one basket at the same time. Spread your purchases, however positive the markets may be. So current levels and at 2548 and 2500. So 3 levels to add Coromandel International. But the way it has moved after such a consolidation, I think 2,900 is there for the asking. So some commitment can be made at current levels, I feel.
Right. Lancelot, your view, please.
So I think they have been showing some improving signs of business as well as margin improvement. So growth may come back for Coromandel, and that is probably one of the reasons why we are seeing an improvement in the price. So at the moment, the stock has moved up a little bit, but if one wants to take a call, then yes, one should look at maybe buying some portion at the current price and some at a little lower valuation, so that you can average it out over over the declines. Thereby, then you will get a better risk return ratio in terms of purchases.
All right, thanks, Lancelot, for that view. On that note, we'll let you go. Himain sir, thank you so much for joining us, and Lancelot as well. Thank you so much, gentlemen, for joining us today and helping our viewers answering all their stock-specific queries. That's all the time we have for queries today. On that note, we'll take a very short break. Be right back with more on the other side.